everyone. Welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. It is Thursday, May 29th. We're giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
We're an hour away now from the closing bell on Wall Street, and we're getting you up to speed, starting with our headline blitz.
I think the key takeaway here is that there's a surge in inference demand. All these reasoning models that have been introduced over the course of the year, 03, 04, DeepSeek, that are capable of generating a lot of tokens to improve upon their answers. That's driving a lot of demand for compute, and that, I think, is the key takeaway from this earnings.
So this is a tremendous ruling by this court coming down late last night. And what the three-judge panel in Manhattan said at the International Trade Court is that the law that Trump relied on, that you just referenced there, the IEEPA, that's the International Economic Emergency Powers Act, it's a 1977 law, that it does not support the type of what the court called unbounded tariffs that come in President Trump's executive orders since he took office in January.
Everything that you want in this modern era. And this is a great transaction. We've had so many customers call us and talk about how they're so excited that we've acquired this company. We're bringing this into our data cloud strategy. I mean, I expect that probably next year we're going to do more than $10 billion in data type products.
We got 1 hour to go until the market close. So taking a look at the major averages here today. Once again, we've been following the tariff headlines. We're going to hear more about it from Ben Werschel in just a moment. But the bottom line is we still don't know what's happening with tariffs, right? You had this court ruling blocking some of President Trump's tariffs, but now there's a lot of speculation about what comes next. Initially, futures were rallying, but we really see kind of a flat session right now, with the Dow only up about 70 points, the S&P 500 up about 0.25%, and the NASDAQ up 0.25%, call it a fifth of 1%, and it's been fading through the day.
Yeah, I mean, to your point, the S&P 500 actually at one point, Julie, it was up around 1%. I mean, we had a rally off, as you said, the headline that a court, okay, it's going to block this wide swath of Trump tariffs. But then, to your point, we have more headlines. It sounds like Trump is going to fight this. He's going to pursue legal challenges, and we're off our highs. We did also get economic data today, worth pointing out. Yeah, I know it's old and it's backward looking, but that GDP data we got, another look at Q1, negative print, and you did see personal spending revised lower there.
Yeah, and you had pointed out to me earlier that we're now seeing the 10-year yield below 4.5%.
Solid 7-year auction today.
Right. I mean, on another day, maybe that would be more supportive for stocks. It's interesting that we're not seeing that sort of feedback loop, even as we get that come down in yields. And of course, also we learned today that President Trump and Fed Chair Jay Powell met, and that Trump, not surprisingly, had some choice words for Powell. We're going to get more details on that in just a moment. But looking elsewhere within stocks here today, looking at the groups on the move, communication services down the most today. So that's one of the drags, but utilities, real estate, so that's where we are seeing that yield relief show up, is in the interest rate sensitive groups. And then we got to check on the NASDAQ 100 as well, because Nvidia still hanging on to gains here. It's up more than 3%. So it too has come down off the highs of the session, and the highs where we saw it last night after it came out with its numbers.
For sure. You know, nearly 90% of analysts tell their clients this one's a buy. There are only 8 analysts on the street who say, you know what, no, it's a hold, stay on the sidelines. We've got one of them. He can explain to us why after report, after call, he still says, nope, it's a neutral.
Exactly. And then elsewhere, you kind of see a mixed picture among large cap tech here today. Well, markets are reacting to that new twist in the tariff saga. A federal court blocking President Trump from imposing sweeping tariffs on imports under an emergency powers law. That move rattled global financial markets, confused trade partners, raised broader fears about inflation and a possible recession. The ruling from a 3-judge panel at the New York-based U.S. Court of International Trade coming after several lawsuits arguing Trump's Liberation Day tariffs exceeded his authority and left the country's trade policy dependent on his changing orders. The White House is appealing the ruling. We're joined now by our Washington correspondent, Ben Werschel. So, Ben, there's a lot to unpack. What is the latest about what happens now?
Yeah, so what I've been looking at today is sort of what are the next steps for Trump as he's trying to do this. And what the White House is saying is it's kind of a two-pronged approach. The first prong is to contest this bill, or is to contest this ruling. They issued two quick motions last evening and then another one today, basically to push back on implementation of the ban on these tariffs, reverse it completely, and also get it to the Supreme Court perhaps as early as this week. So they're really aggressive on that front. The second front is exploring legal other routes to get to these same tariffs through different routes, which the White House has confirmed they're also exploring. Part of the rationale of this decision last night was that Trump has the authority to do a lot of these actions he's done using emergency authority through other things. And this is true because Congress has given the president a wide different array of authorities to do it. One intriguing scenario here, if these appeals fail, is that Trump could move on a different quick strike action. It's called Section 122 to kind of essentially re-implement the tariffs quickly, but only for 150 days, and then pursue a separate authority that could allow him to get a lot of them in place permanently. So that's a multi-step process that has a lot of legal tripwires with it, but it's one that's not likely to provide a lot of certainty for importers for certain.
Ben, you mentioned Congress there. Is it possible Congress would ever step in and give Trump this authority? I mean, could they do that? Would they do that?
Well, they have given over basically almost total authority to the president over decades now. The question, I think, is whether they would come in to sort of take back some of the authority. Interestingly, this quick strike option, this Section 122, does have a bigger role for Congress. Basically, the president can implement it, but there's a limit on how high and for how long unless Congress extends it. So he could be going to Congress to ask him to keep these tariffs in place for longer. There's definitely been a lot of calls in the last 24 hours from lawmakers who are opposed to this for Congress to take back their authority. They could always pass a law that says, no, we're in charge of tariffs. But that's a hard lift, especially with Congress so loyal to the president with these Republicans in charge.
All right, Ben, thank you. Appreciate it.
Okay.
Well, Federal Reserve Chair Jerome Powell meets with the president, a first since Trump's return to the White House. The meeting comes as Trump has called for the central bank to lower rates. Yahoo Finance's Jennifer Schomburger joins us now with the very latest. Jennifer, what I wouldn't have done to be in that room, Jennifer, just to see that exchange.
I know, to be a fly on that wall, right, Josh? At the invitation of the president, Fed Chair Jay Powell did meet with Donald Trump for the first time during his second term, as the president told Powell he's making a big mistake by not lowering interest rates. According to a statement from the Federal Reserve, Powell met with the president to discuss his outlook for the economy, employment, and inflation. Powell said that, quote, they did not discuss his expectations for monetary policy except to stress that the path of policy will depend entirely on incoming economic information and what that means for the outlook. The chair said that he and his colleagues will set monetary policy as required by law to support maximum employment and stable prices, and will make those decisions based solely on careful, objective, and non-political analysis. White House Press Secretary Caroline Leavitt said the president pushed Powell to lower rates.
The president did say that he believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries. And the president's been very vocal about that, both publicly and now I can reveal privately as well.
Leavitt also said Trump did not discuss his plans for replacing Powell after his term ends or even firing Powell in today's meeting. And all of this coming after I asked Chair Powell during his press conference following the FOMC interest rate meeting on May 7th why he hasn't requested a meeting with the president in light of all the economic uncertainty.
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And of course, all of this coming after President Trump has repeatedly pressured Jay Powell and his colleagues to lower rates for all of this year, really. And after the president said at one point that he couldn't wait for Powell's termination to come fast enough, only to turn around and say that he has no intention of firing Chair Powell before his term ends in May 2026. Back to you.
Thank you, Jen. Appreciate it. Well, for more on the market action, let's bring in here Jeff Schulz, ClearBridge Investments Head of Economic and Market Strategy. Jeff, it is good to see you. So, interesting day today, Jeff. You know, we did have a rally. The S&P 500 was up around 1% at one point. You know, we hear a court blocking a wide swath of Trump's tariffs. Then we hear Trump sounds like it's going to fight this, pursue legal challenges. We're off the highs. I'm just curious, Jeff, how as a market strategist, you're thinking through those headlines, the news, the possible impact.
Well, the knee-jerk reaction was obviously positive, that there was going to be a de-escalation on the tariff front, but then reality started to set in that Trump was going to appeal this at higher courts and it could be overturned. But also there's many avenues for Trump to reimpose the tariffs that may be going away after yesterday's decision. He can use two of the roads that are familiar to Trump, which are Section 232 sectorial tariffs. These are still in place for autos, auto parts, steel, aluminum. There's outstanding investigations for copper, pharmaceuticals, and semis. That can be broadened out. Or he can institute new Section 301 investigations into our larger trading partners. And although those may take a couple of months to come to fruition, in the interim, he can invoke Section 122, which will basically replace that 10% universal baseline tariff that was instituted on Liberation Day. This only can go out for about 150 days. It can go up to about 15%, but by that time, those Section 301 investigations and Section 232 investigations would likely be finished. So although the composition of the tariffs may change and the look and feel may change, tariffs are still going to be a part of the narrative, and I think the markets rightfully took back some of the gains that they had coming into the day.
So if we're back where we started, Jeff, effectively, with, you know, not being entirely sure, say, what the tariff landscape is going to look like, especially the further out you get, what then does that leave us with in terms of the base case for stocks?
Well, I think you're going to see a slowdown in economic momentum, not recessionary, but a slowdown from where we were. And I know that we got first quarter GDP's second estimate today. It did move up a little bit, but the core GDP measure that we like to look at, which is real final sales to domestic purchasers, it strips out net trade, inventories, government spending. That was revised down a little, but it's still at a healthy 2.5%. I think that's likely going to move closer to 1% over the next couple of quarters. And that is going to create a little bit of choppiness in the markets. And I think we will see tech have some leadership. I think some of the more defensive areas will see some leadership. Higher quality will see some leadership. But as we move through the next quarter or two and we get some visibility on the reconciliation bill, which is going to be stimulative with peak stimulus hitting in the first half of next year, I think that will jumpstart the markets higher and a rotation more durably into some of the more cyclical areas, small caps and value that, quite frankly, have a lot more room to run from a relative basis. So I think we could see some choppiness, but I see higher highs ahead as we move through the year.
And so, Jeff, I'm just curious, so if you see this economic slowdown, what does that mean for corporate profit growth in 2025? What are your expectations?
Yeah, so margins are off the highs. I think we had a blockbuster first quarter earnings, but really that was before tariffs started to bite in a more meaningful way. So I do think that expectations for this year can remain intact, which is for 7% earnings growth. But you know, I think as we start to see this slowdown materialize and that uncertainty still very much out there with the tariff dynamic changing as we saw today, I think the guidance is going to be a little bit murkier as we move forward, creating, again, a little bit of an air pocket when it comes to the markets. But overall, absent a recession, which is not our base case, we think the markets are going to be able to power through this.
Jeff, how does the Fed fit into all of this? As we were just talking about Powell and Trump meeting, you know, and Trump sort of trying to jawbone those rates. But, you know, the Fed is going to have to cut rates at some point. And how supportive is that going to be for stocks? How important is it that it happens sooner rather than later?
Well, the Fed's between a rock and a hard space right here. Obviously, inflation is going to be moving higher with tariffs. Inflation expectations are moving higher in some of the confidence surveys that are out there, in particular the University of Michigan survey. And the Fed is very aware that after just battling a higher inflation regime and potentially seeing higher inflation over the near term, the Fed has to stand pat with some restrictive monetary policy. So I see the Fed not doing anything really till we get to the third or fourth quarter, when we get visibility on the scope of tariffs that are going to be in place, and then ultimately the magnitude of the increase of inflation. But I do see the Fed cutting, but I think it's probably going to be in December or maybe even in the beginning of 2026 before we start to see those cuts come to fruition. So I think the markets are going to have to wait until the Fed to act more definitively.
Jeff, I want to ask you about what we're seeing in the bond market as well. We had a solid 7-year auction today. You're looking at your benchmark 10-year. You're back to 4.4. What do you make of that, Jeff? I mean, is that recession fears unwinding? Is that investors aren't so worried about debts and deficits after all? Walk me through it.
Well, I think there was a little bit of concern after some weaker auctions in Japan that the longer end of the curve was going to unanchor to the upside. Bond vigilantes running back into town with deficit concerns. But at the end of the day, if you look at the rise of the 10-year Treasury, and we've seen 5 major rises since 2022, 10-year Treasury can be broken down into 3 components. You have a growth component, an inflation component, and the last is called a term premium, which is the extra compensation that someone will require to hold a bond to maturity. Now, over the last 5 times we've seen an increase of the 10-year Treasury, it's really been that term premium that's driven a majority of that rise, and similar to what we've seen this time around. But with the term premium at 50 or 175 basis points, we are just back to levels that we saw with the term premium prior to the global financial crisis. So although people talk about the deficit being unsustainable, people requiring higher compensation for owning longer dated bonds, I view this as normalization and really not a function of people really being genuinely concerned about the deficit picture. So I see the 10-year Treasury kind of hanging out in this 4.25% to 4.75% range as we move through this period.
Jeff, thanks. Good to see you.
Thanks for having me.
We're just getting started here on Market Domination. Don't go anywhere. We'll have more of the day's financial news coming up when we return. Investors shaking off Nvidia's sales hit from the ban on shipments of its H20 chips to China. Shares rising as Wall Street sees healthy demand and growth for the chip giant. Our next guest says there still needs to be clarity and resolution on China. D.A. Davidson Managing Director Gil Luria joining us now to discuss. Hey, Gil, it's always good to see you. So obviously we see Nvidia rallying in the wake of their earnings, and now investors, as always, are looking at what is coming next. What the results seem to demonstrate to many investors is that the underlying growth is strong enough to power things forward for now, even without those China sales. How are you framing it?
No, that's exactly right. So that's the relief today in the market is it could have been a lot worse. The fact that Nvidia still met expectations for the April quarter and guided for sequential growth into the July quarter in spite of the drop off of those sales to China is very impressive. It tells you that it has a lot of sources for demand right now, and it made up for that shortfall in China, at least in the short term. The bigger question is what happens from here? The Chinese market is a very important market. If Nvidia is excluded from it, that's a pretty big revenue headwind that it's going to go through the next few quarters. And we really don't know the answer yet. Nvidia is going to redesign a degraded chip that will fit the US government's regulation in terms of what they can export to China. And we're going to have to see if they can sell that in China. And then we're going to have to see if the Chinese buyers are even interested in it. If it's even further degraded, Chinese buyers, those large customers, Alibaba, Tencent, ByteDance, etc., may just decide to buy from Huawei. And that would mean that the whole Chinese market would drop off for Nvidia, which would be a pretty substantial headwind. So we still don't know the answer to that question in spite of these results that were much better than feared.
Gil, I would love to get your response to sort of the bull's take this morning, right? And if I'm paraphrasing, it goes something like this, Gil, which is, yes, China is an issue. But their argument is that NVIDIA's core business remains very solid, driven by sovereign demand, driven by inferencing, that all businesses are expected to grow in the July quarter despite the China ban. Isn't the skeptical take, Gil, looking just a bit weaker here with a stock that has roared 45% now from the April low, Gil?
Yeah, we're still at the same place we were a year ago on Nvidia. It hit 140 exactly a year ago in June. So it's been choppy. It's been choppy because it is so hard to predict the trajectory. And stepping back, you want to look at the different segments of customers for Nvidia, from the very best customers. Those are customers like Meta and Tesla that generate revenue day to day from AI because they either sell more ads or sell more self-driving. Those are expanding their consumption. Then you have the biggest cluster, the cloud service providers, the hyperscalers, Microsoft, Amazon, Google. There you've already seen the demand starting to flatten. Microsoft had CapEx slightly down. It'll be flat next quarter. Amazon guided to flat for the rest of the year. So that cohort is not going to be able to drive the kind of growth that it's driven for NVIDIA. Then you have China. We just talked about the fact that could be as much as a quarter of their ultimate sales being a headwind. And then you have another segment of the neo clouds that are these upstart companies that have been borrowing at well below investment grade debt to build out data centers. It's unclear how sustainable that is. So there are segments that are strong. There are segments that are more susceptible to an economic downturn maybe. And then there's China. And the blend of all that, we believe, is not necessarily enough to generate the growth that NVIDIA has projected by consensus earnings. Consensus has them doing $250 billion of revenue next year, 25% growth. Given the segmentation I just laid out, that is the bull case, but it's not a foregone conclusion.
So what is your case then, Gil, for growth next year in revenue?
That Meta and Tesla continue to be strong. The hyperscalers will continue to buy, but won't increase their buying at a very high rate. That China, it's a binary. Either they'll be able to continue to sell in China and it's fine, or much of that market could go away. Let's not forget there's the direct sales to China that have already been frozen, but then there's the indirect sales. NVIDIA's been selling to resellers that have then turned around, even if NVIDIA doesn't know, and sold into China. There's Senator Cotton made introduced legislation into Congress to track GPUs, so that won't happen. Department of Commerce has issued regulations that restrict NVIDIA from which resellers it can sell to. So that's where we see that there could be a lot of variability. And again, that final customer segment, those upstart neo clouds, if they have access to capital, then they could be fine. But other than that, the growth there may not be there for NVIDIA. We have a lot less than 25%. We have about 5 to 10% growth for next year.
Let me ask you, we talked about China. What about what we were seeing in the Middle East, Saudi Arabia and the UAE, the deals that, not just NVIDIA, but others were announcing? Because some folks on the street, Gil, said, well, those deals, that throws a wrench, according to them, in this argument that 2025 does represent some type of high watermark, some type of peak in AI spend.
So that is a very large potential market. But to put it in context, NVIDIA had been selling millions of GPUs into China, and it's currently selling maybe tens of thousands of GPUs into the Gulf. Now, some of those projects that were announced would get into hundreds of thousands of GPUs over the next several years. But even if they do ramp up to the extent that has been promised, which is not a certainty, they even wouldn't be enough to make up for China if China was to drop off. So it is a good sign, but the use of the term sovereign is a little bit exaggerated. What we are talking about is OpenAI building data centers in the Gulf. We're not talking about Gulf countries. They have no use for data centers unless it's operated by a hyperscaler or by OpenAI. So that's included in that overall demand that we're talking about, which is rising. It just may not rise as fast as some expectations are out there.
And Gil, then zooming out to just look at AI infrastructure spending more broadly, where are we in that spending cycle?
We are early. We do need to build a lot more infrastructure because the demand is going to grow. But let's not forget that every time we add all this capacity, it allows us to do a lot more inferencing, right? A lot more generating chats, writing code, doing some customer service, at some point generating videos. That is going to grow exponentially. But we don't necessarily need to grow the data center capacity exponentially. It's enough that we add every year some capacity, mostly because the models, those AI models, are becoming so much more efficient and more specialized that we don't need to throw as much brute force in order to accomplish those AI inference needs that we're going to grow. So I expect the infrastructure to continue to grow, just not at the rates that it has for the last couple of years, which has driven Nvidia's stock to this point.
Gil, another name you cover, which just reported results, and I'd love to get your take on this too, would be Salesforce. Investors seem disappointed in that. You have, I believe, Gil, the equivalent of a sell on that name. How come?
Because while we're all excited about AI, and we agree that AI is going to transform all of software over time, we feel like Salesforce may have overcorrected to AI. They have a $1 billion AI business that they are focusing all their attention on, and then the $40 billion business that they have doing everything else is decelerating very rapidly. And we're concerned that the overcorrection onto the AI may be part of the reason the rest of the business is decelerating, and that they should probably spend more attention on the marketing cloud and the sales cloud and the service cloud in order to get those businesses back up. Because right now, Salesforce is just a source of share gains for a slew of other companies, HubSpot and ServiceNow and Braze and Klaviyo and Shopify, that are taking share from Salesforce because Salesforce is too focused on that shiny object.
Gil, always great to chat with you. Thank you so much.
Thank you.
We've got breaking news now. A federal appeals court is pausing a U.S. trade court ruling that blocked President Trump's global tariffs. Basically, tariffs are still in place for now, is the bottom line. Senior legal reporter Alexis Keenan is here with more. So all of the back and forth.
A lot of back and forth, back on.
And this is this a sooner finding than had been expected, that the tariffs are going to be still in place for now?
So the Federal Circuit, it's an appellate court over the top of the International Trade Court. It can decide, if it gets an application from the Trump administration, which it did, to put a temporary pause on what that lower court decided. So this is the court stepping in here, this appellate court, and reinstating these tariffs and saying it needs some time to look at the motions, look at briefings, look at the issues. I don't know exactly where it's going to go from here, whether this is going to be an issue that will be decided at this stage at the appellate court level, or whether the trial court, the International Trade Court, will be handling some of this. What the court said, this Federal Circuit Court, is that the request for an immediate administrative stay, they granted it to the extent they say that the judgments and the permanent injunctions entered by the Court of International Trade are temporarily stayed until further notice. So the appeals court seeming here to put this pause into effect, and they're asking the administration to give briefings to the court no later than June 9th. So that's the timeline that we have to work with right now.
So you kind of find the bouncing ball in the courts, Alexis, but correct me if I'm wrong, doesn't Trump, beyond that, have plenty of tariff tools at his disposal? I mean, for me, it's Section 232, 122, 301. I mean, he has what sounds like just tremendous tariff authority and power here.
Well, certainly the administration thinks so, but they chose to go with the act that they did, the Emergency Act, where Trump had said, the administration had said that these national emergencies, immigration, drug trafficking, flows of illegal drugs into the United States, and so forth, was a national emergency. And that didn't work, at least at this lower court level. Now, the legal experts I've been talking to in this area, they say it's anybody's guess what this appeals court might decide when the administration and the challengers come up before them. Maybe it'll go the other way. Maybe this International Emergency Act will be enough authority for a different court.
Alexis,
find out.
we will keep following it. Thank you so much.
Yeah,
Appreciate
bounce
it.
around. Thanks.
Well, Informatica in the spotlight this week after revealing it will be acquired by Salesforce as part of the $8 billion deal. Salesforce plans to invest in the cloud data management company's ecosystem of data and infrastructure partners. Here to discuss this and more, we have Informatica CEO Amid Walia. Amid, it is good to see you, and congrats on this deal, Amid. I do want your take on the deal and some of the analysts' reaction, Amid, because there are skeptics. And we had one such skeptic on the show this week, covers your company, knows it well. And we asked him why he was skeptical. And I want to get your take on this. And it was because, in part, he says, Informatica is cheaper than it was a year ago. And he says it's cheaper than it was a year ago because there are major execution challenges at this company. That's how he's talking about it and describing it to his clients. He talked about you all reporting, again, his words, rocky quarters. What's your response to that?
Well, look, thanks for the opportunity here. Look, as we step back, you've seen it, right? It's the generative AI opportunity, the agentic AI opportunity that's early stages in enterprise. And what we do is data management for that. Look, from where we ended, we are headed towards $1 billion cloud ARR, which is what we guided to, growing 25% for the year. And we, at the end of Q1, grew 30% against it. So we feel great about it. We just had a user conference that had more people attend across the globe. So we announced our agents. We announced many new offerings of Claire, which is our Gen AI engine. And when we look to come together with Salesforce, with their agent force, data cloud, all of the massive distribution and the innovation engine we have, we couldn't be more thrilled about our joint customers and the whole acceleration of the Gen AI across the enterprise world. And I couldn't be more excited about it.
Amid, I want to ask you as well about the sort of integration, the role that you'll play within Salesforce, because as our colleague Brian Sozzi asked Marc Benioff last night when they spoke, he said Informatica has been sort of known as the Switzerland of data, being an independent third party with a range of different customers, Oracle, AWS among them. And I want to play for you what Marc Benioff said about, about the competitiveness of Informatica within Salesforce. Listen to what he said.
Well, we, of course, buy companies that deeply integrate with all of these companies all the time. And so, like a product like Tableau, you could say the same thing, and it's been a great success for us.
And so, Amid, how do you see, that sort of fitting within and still catering to that broad range of clients?
Well, like Marc said it very well. First of all, Marc's an awesome visionary. I've talked to him so many times. They've been involved with us from the early days. They're investors in Informatica. We are partners. They use our products. We use their products. We know each other very, very well. And look, Tableau is a great example. Nothing changes to our place in the ecosystem that we support every data type, every hyperscaler, every data platform, the unique place we have. In fact, that's the strength we have in the world of Gen AI, to bring all of that data together with high quality, high governance, high metadata, high mastering, to help the thousands and thousands of customers, enterprise customers across the globe, to truly operationalize Gen AI, because that's where customers are stuck, which is where we come into play.
I'm always curious, Amid, to just get your take on the pulse of demand out there, the broad demand environment. Because as you said, you've got a lot of customers. They're all over the world. How would you characterize what you're hearing from customers, Amid? Are they eager to spend right now? Do we hear more of a cost-cutting mode out there? What are you hearing?
Well, we just had a user conference, and we had, as I said, more users this year than last year who showed up. Tremendous excitement. I think I've said that, look, Gen AI in enterprises is at a stage where it's getting into production mode. It's not yet full production mode like consumers we are, and partly because of all things around data, the governance, the quality, and all of the stuff around data that needs to be managed. It has to be trusted AI. And I see every customer has invested in Gen AI. And they're all in varying levels of pilot, POC, small production to full production. So it's not a matter of if, it's a matter of when. I see towards the end of this year, walking into next year, that cycle to genuinely have a much more steeper curve of adoption and usage.
Amit, thank you so mumuch for joining us. Really appreciate it, and congrats again.
Thank you so much.
We're just getting started here on Market Domination. Coming up, a glow up for e.l.f. Beauty. We're speaking with the CFO about earnings and an impressive new celebrity deal. That and more when we return. Stay with us. e.l.f. Beauty announced plans to acquire Hailey Bieber's beauty brand Rhode. It's in a deal worth up to $1 billion as the makeup company looks to expand further into skincare. It's e.l.f.'s biggest deal ever, and it's expected to close later this year. We're joined now by Mandy Fields, Chief Financial Officer of the cosmetics firm. Mandy, thank you so much for being here. Obviously, you guys causing some waves with this buy that you guys made. So now with this acquisition, once it closes, you'll have the e.l.f. brand, you'll have Naturium, which is another skincare brand that you all bought, and you'll have Rhode. So talk to me about how Rhode fits into the portfolio and what your plans are for it.
Well, thank you so much for having me. And we are very excited to welcome Rhode into the e.l.f. Beauty portfolio of brands. We found a like-minded disruptor in Rhode. And what Hailey has built is really connected to community, which is also very important to us. And so we see this as a great fit in our portfolio and aligns with our vision of building a different kind of beauty company.
And so what will, I know that there was a lot of talk on the call about Rhode's its plans already in place to expand into Sephora, for example. Are you looking for other sales channels? It's also a limited brand in terms of the number of products, although it's grown very quickly. It only has 10 products. So are you planning to expand the brand beyond those products and in more sales locations?
Well, the brand is very impressive. It's gone from 0 to $212 million in net sales in 3 years on, as you said, 10 products overall, only online. And so this expansion into Sephora is very exciting. And with our retail expertise, we are very much looking forward to that.
And, when you look at now the company that you all are building, and I think of a lot of legacy beauty companies that have a lot of brands underneath them. Is that what e.l.f. is now trying to build? And if so, what is that sort of umbrella identity, if you will, of e.l.f.?
Yes, we have a vision of building a different kind of beauty company, or really a different kind of company, period. Really built on the notion of disrupting norms, shaping culture, and connecting communities. And all of our brands have that unifying thread. So there's not a number of brands that we have as an objective to have in our portfolio. It's really about those that disrupt norms and connect communities. That's most important.
Are you all actively looking at other brands that fit that profile to add to e.l.f.?
We see a lot of things come through, but we have been very disciplined, in fact, on the M&A front. You mentioned Naturium that we acquired back in 2023. Well People we acquired earlier on as well. And so we've been very disciplined on that front. And so not proactively looking, but again, if we found something that kind of hit the mark, welcome it to the portfolio.
Gotcha. I want to talk about tariffs and the price increase that you all just announced of $1 across the board on your products. What have you been hearing? I know you all have a very active conversation with your customers, perhaps more active than some other beauty brands. What have you been hearing from your customers in reaction to that price increase?
So you're right. We announced our price increase last Friday. And when we say announce, we announced that on our social media channels to our community, because that's who we want to be most transparent with. Our pricing will actually not go into effect until August 1st. And so our community has been very positive on this notion of having to raise price. We're only doing it by $1. And again, we've been transparent with our community, giving them a bit of a heads up before it goes into effect in August.
And as you noted on the call, you all are not giving a forecast for the full year because the tariff outlook is so uncertain here. So if some of the tariffs get rolled back, and I know 75% of your manufacturing happens in China, if some of the tariffs get rolled back, will the price increase roll back as well, or is that something you're putting in place now and it's sort of indefinite?
Well, there's just such a range of outcomes from a tariff perspective. This is the main driver of why we did not provide guidance. I saw the segment right before was about tariffs once again. And so until we have more certainty on the tariff front, we won't be providing guidance. And I would say pricing is one lever that we have in our toolkit, but we're also looking at our supply chain to optimize that and also looking at business diversification as we think about tariff mitigation.
I was also struck by the international growth that you all are seeing. International sales up by 60%. Net sales in the U.S., by contrast, up only 1%. What do you expect to be that sort of cadence going forward?
Well, we're very pleased with what we're seeing from a sales growth standpoint. In fact, Q4 marked our 25th consecutive quarter of net sales growth and market share gains. And we're really the only beauty company to have grown market share for 25 consecutive quarters. And so we're very proud of the results that we've delivered. Our fiscal 25, which we just reported yesterday, up 28%. So very strong results and very proud of the team.
And Mandy, thank you so much for your time. Appreciate it.
Thank you so much for having me.
Take care.
All right, now time for some of today's trending tickers. We're checking in here on Uber as Tesla looks to launch its robotaxi service in Austin on June 12th. According to Bloomberg, Musk had previously said, remember, service will begin by the end of June. Progress in Tesla's robotaxi posing a potential competitive risk for ride-hailing giant Uber. So we did see Uber shares. They're in the red there today. You can see we're down almost 5% in today's trade. Elon Musk does confirm they've been testing self-driving Model Ys in Austin. I will say there is pushback from Uber bulls on this. I think folks like Marc Benioff over at Evercore has written a lot about this, and he tells his clients, he's not concerned about this, and he'll talk about how its AV ecosystem continues to build, the Waymo rollout in Austin. He'll talk about this kind of slew of recent AV partner deals that Uber has. And really, I know the stock's down today, but pull back that chart. 2025 has been great for Dara. It's up about 40%.
Yeah, and it's still trading near a record high.
Yeah.
So that's something to point out as well. To your point, Uber has been building its AV plan through partnerships more so than doing it in-house here. And it's by no means a foregone conclusion that Tesla will ultimately be successful at scale with its plan. It's very early in the process, and we're going to have to see how it goes in Austin. We'll also see how regulators react to their plans throughout the country as well. All right, let's turn to Synopsys here. That company taking a hit amid new restrictions on exports to China. Synopsys suspending its financial guidance for the current quarter and the full fiscal year. Now, what's interesting here is Synopsys actually reported its numbers after the close yesterday, and there had been that report that there were going to be new restrictions on this automation design companies like a Synopsys and a Cadence. At the time, Synopsys didn't react because it hadn't yet gotten a formal
They said they hadn't received that notice.
But now they've gotten the announcement, and so hence they are suspending.
Yeah, and somehow, Bloomberg had the report on this and said the administration was going to make this move, restrict the sale of chip design software to China. As you said, the company just did report. They were asked about it and just said they hadn't received any such notice. Now, apparently, they had. So suspending guidance for the current quarter, for the year. They did receive word from the government of these new export restrictions to China. It says it got the letter from the Commerce Department, and now it's time to address the financial impact here.
That's right. All right, we're going to take a quick break here on Market Domination. We'll be right back.
Software stocks have been a battleground this earnings season. Salesforce announcing first quarter results yesterday, beating on earnings and raising its full year guidance. Yahoo Finance talked to CEO Marc Benioff after that company's earnings.
Everything went well for us this quarter. We had bookings go well, revenue went well, and currency went well, and we're raising our guidance by $400 million.
But despite that upbeat report, stock taking a hit today amid a challenging macroeconomic landscape. We're navigating how to play the software sector with the Yahoo Finance playbook. And joining us now is Brent Bracelin, equity research analyst of cloud software and analytics at Piper Sandler. Brent, it is always great to see you and to have you on the show. Maybe to start, Brent, kind of a bigger picture question I had for you, because I think when a lot of investors, Brent, they think of your coverage universe, they think of software names, they think, okay, these are relatively tariff resistant, but there can be kind of downstream effects because of all the uncertainty, Brent. Maybe it's longer sales cycles or smaller deal sizes. I'm just curious whether you're picking up on any of that in your coverage universe.
It's a good question and a complex question because it's not an easy answer. I think part of the challenge in software right now is really around the stage of maturity. And I think you're seeing this in Salesforce today is software had this great 20-year cycle as we think about the transition from on-prem to cloud, from license to subscription software. And we've really treated these software companies as pure growth companies. But the cloud market is maturing as we kind of enter a whole new wave of software investment going into AI. And I think it's been a bit challenging as we think about the right multiples, the right valuations we're willing to pay for what is now looks like more traditional software, mid-teens, low teens growth rates, in some cases, high single-digit growth rates. That's signs of maturity, frankly. And I think that's what's driving the movement, interest in the software sector, more so than I would say tariffs. I think this is still a pretty resilient group, but the growth that we saw, let's say, 3 years ago, more than 40 public cloud software names growing over 40%. If I look at that profile of 30% growers in 2026, there's zero. So very different growth profile today in the software landscape than there was, let's say, 3 years ago.
Well, and Brent, let's bring it back then to Salesforce, because it is seeing more growth in that one area, right? The sort of AI area. But that area is still a pretty small slice of the overall pie. So is that enough to be an impetus for people to come in and buy the stock?
Eventually, yes. But if you're a growth investor...
How eventually, I guess, is part of the question.
Yeah, it's a really small part of the overall business. Growth still overall slowed in the quarter. If you look at where growth was at a year ago, and the one part of their business where you're seeing A show up, which is their platforms and other segment, that grew from like 12% to 14%. So seeing a slight acceleration in one of their segments, clearly not enough to drive an acceleration overall. Could that happen next year? Possibly. More likely than not, it could be 2 years from now before you see it having a much more material impact on the growth profile. But recall, these are similar things that we saw at Microsoft 10 years ago. We saw this about 8-9 years ago at Oracle with OCI. It takes a long time for enterprises to adopt these new technologies before it really starts to drive a reacceleration in a mature business. And that's what Salesforce is now. It's a mature software business.
Brent, you have a number of buys in your coverage universe. If I was asked to, Brent, boil it down, give me one you like the most here, Brent, what would you tell me?
The interesting thing is we have had in the last 45 days since the April lows a big spike in the software index IGV, over 25% bounce here. So a lot of our favorite ideas have moved. But I would say the one that still has room to run is a company called Monday.com, MNDY. This is a $1 billion plus ARR business, $1 billion in cash. 25% plus grower, 25% free cash flow margins, long runway for growth. This is a company that has custom app and workflow builder tools for the masses. They're selling into large organizations that in some cases will deploy this across 80,000 seats, and they can also sell this to a small business. So really broad market opportunity here. But if you're looking for growth, and profitability, Monday.com is one of our favorite, highest conviction growth ideas, and it still has room to run.
Brent, it is always great to see you and to have you on the show. Thank you for joining us, sir.
Absolutely. Thanks for having me.
And while wrapping up today's Market Domination, don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime.